Essentially, you're the guy, there's a couple other guys out there who have literally seen it all. Can you suggest we're on a path to an EM crisis like the others you lived over the years?
It feels very much like 1982. 1982 was the IMF meeting in Montreal. Mexico had just defaulted. I arrived. I spoke with one of my University of Chicago colleagues, Carlos Langoni. He was the president of Banco Central Brazil. I said, Carlos, there is a big freight train coming right at you. And he says, oh, no, we're going to get money from the Japanese. 6 months later, everybody was in default.
Okay, within this is the idea of the unique politics of the moment. Is Trump administration policy, or so the critics would say naivete, is that going to get in the way of an emerging market workout this time around?
Well, it's going to be the trigger for very significant changes. In particular, people don't think about the market. We had globalization. What did globalization do? It disaggregated trade from goods to components. Now we have barriers. So what's going to happen is China is going to re-globalize its trade facing these tariffs. And so what we're going to see is the development of an Asian trading bloc, not because of Chinese politics, but because of the market. The market's going to create a trading bloc because they don't have access to the U.S. market anymore.
What's your take, Tony, on emerging markets overall? I mean, we have, again, a great Bloomberg story saying emerging markets face a trade reality check after a dollar breather. And then now we're also worrying about shadow banking, not in China, not in the U.S., but in India.
I have a quick view, then I want to ask Lawrence his view on another matter. Quick view is that the Federal Reserve is often blamed for the problems in the emerging markets. We would say that it is not to blame. Ben Bernanke likes to tell us that these nations have had plenty of time. In fact, since 2013, for the changes in the monetary policy that have occurred in the United States, and so they've had time to make a change. So it's more due to political factors. So I'd like to ask Lawrence, do you believe in the idea of convergence over time between emerging markets and the developed world? This is a theory that we've gotten from one of our advisors, Mike Spence, who wrote a book about the next convergence, the idea that, let's say, by 2050,
that was my book of the summer one year.
Great book.
I got a royalty check off that. I moved
lives
so many copies.
in Italy, near Lake Como. So you believe in the idea of convergence. Is there any interruption in it occurring? Will the emerging markets catch up with the developed world?
I think it's you can't talk about emerging markets in general. You have to look at individual countries. And what's happening now is that China is going to emerge as the major force building this trading bloc, and the U.S. is going to fall behind. And because, they talk about controls on technology, but technology is, that you can disaggregate technology. You can buy human capital. So I think we're looking at some major changes. When we talk about convergence, we're talking about convergence to what? We're going to have a new trading world. And this is what people have to get their head around.
Will the dollar as a reserve currency come into question? So
no, I don't think so.
Emerging markets pivot to renminbi?
Everybody can use the dollar. It's not a problem.
Okay, but so what are the underlying consequences of this reshifting?
Well, the underlying consequences are that we're going to see the global trading environment degenerate into blocks because of the trade wars. So we're going to have an Asian trading bloc. We're going to have a European trading bloc is probably going to get stronger. And then we're going to have a North American trading bloc, LATAM.
You had the privilege of studying under Milton Friedman and particularly under the laureate George Stigler. His racket is George Stigler invented the study of information. So now you come forward literally 50 years, half a century.
Yeah.
Is our international economics different now because of the slew rates of information, the speed of information, the need to react, the need, literally the Twitter thing and all that? Is it just become a cacophony because of information?
Well, it's a combination of things. So it is the information flow and the control of information. And companies, they control information, they can control their logistics, they can have inputs from all over the world and reduce their cost of production. So that's globalization. And what we're going to have is we're going to have a different reassembly of all of these forces. And it's going to look very different from what we see today.
Okay, are we going to see more contagion from emerging markets like we saw over the summer? And how do we fix Turkey and how do we fix, Argentina?
I think the crisis will be triggered by emerging markets, yes.
This is the next crisis, the next financial crisis.
The next crisis.
In what time frame?
2 to 3 years.
And this is because debt overload.
So what we have is we have a perfect storm. We have China, the China economic war. It's not a trade war. It's an economic war. Economic
I love
confrontation.
That. Can I steal that from you?
Yes, of course.
Yes. Okay, that's why I came to work today.
Okay, Tom's going to win
it's
this.
It's an economic war, not a trade war.
Okay, let him finish.
Turkey by itself is not systemic. But we're going to have a financial crisis in Turkey because the leadership there does not understand how to deal with the crisis. And the other crisis is not Argentina. I think Argentina has probably hit bottom. The other crisis is Brazil because we have an election in 3 weeks.
Right.
We have Bolsonaro on the right. We have Haddad on the left.
Yep.
That's going to create massive volatility.